Dear Forex traders, trust you guys will be benefiting from our Forex trading strategy, our Forex trading education, and market analysis. And guys, in this particular content, guys, we'll be looking at what the same thing, using the same strategy and backtesting the market. Okay. Now, the strategy we're talking about, guys, is the use of the MLX IVT and use of the trading sessions, right, for precision trading, and a simple Fibonacci retracement tool, and how we apply it on the chart. So guys, we'll be using the pound USD as our subject pair. And then if you enjoy this content, guys, don't forget to like, don't forget to subscribe to the channel, and don't forget to share your thoughts in the comment section as we trade Forex with Millionaire Logistics. So guys, as promised on this particular content, guys, we'll be not just be sharing the whole strategy and all that, but we'll be looking at something deeper. In our previous content, if you go back, we shared some insights as regards to the NFP, and that content was in fact published on Friday, right? Friday, early hours, Friday by 8 a.m. And we talked about the NFP and the expectations and how we read the market using the data that comes from the NFP. And guys, yesterday being Friday, the first Friday of the new month, the NFP reports was actually published, right? And now in this particular content too, the interesting part is we're going to show you right here on the charts how the market behaved during that time. And we're also going to be showing you the exact window period and how in fact we got about 60 pips off that market move as at when the news was released. And then we'll be looking at how we're still going to be using that NFP data to analyze the market, the pound USD market, and basically the USD related pairs, and how we're going to get a mid-term bias of that market and know how to approach the market technically. Pound USD, if you recall from the last time we stopped here, this was on Friday, this is the 7th, but I'm just going to share with you because we shared the content up to, I think the content was published on Friday, early hours of Friday, and then we saw all this price movement, and in fact we did share our expectations from the market, right, and how we're still going to trade it. So in this content, everything is going to be wrapped up to make it very interesting and same time make it effective and also help you to make profits off the market, trading exactly what we trade with our concepts, with our ideas, and of course with our trading tool, the MLX IVT. Okay, so I'm just going to keep it short. We're going to be looking at the market from here, and then perhaps we're still going to browse the internet to see the fundamentals. All right, so just stick closely. Now, this is how the market performed on the previous day. Definitely, we saw this from the previous content, all right? So using a simple Fibonacci tool once again, if you look at this chart, it's been separated by what the period separators 1 and then the trading sessions. If you look closely, you'll be seeing the Tokyo here, which connotes the Asian session. You'll also be seeing the London session here and the New York and how the day ends. Now remember guys, for this strategy, one thing where we always take cognizance of what we get reference points first, reference points, all right? And we align them with the market structure. So using the previous day market to guide the next movement. Remember we're scalping here. We want to get what the high of the previous day and the low of the previous day. And that way we'll see that the trend of the market, the flow is what? Downwards, all right? Downwards. So the next thing we're going to do now, before even seeing this, we highlighted that in the previous content if you check. Now the next thing we're going to do is using our Fibonacci retracement tool to what? Get our swing, right? So we pin it at the wick of the candles, right? The high of the previous day and the low of the previous day. Now what do we have here? Guys, if you look closely, let me take this off. All right. So we have reference points. If you look at the present day, we have reference points here. Now, what are the reference points, guys? The Fibonacci levels. We expect that this market from this point, the previous day, if the market before the beginning of the London session, right, you can see that the market has been trading within this range, So we have a very perfect range here. With expectations, normally under normal technical conditions, we want to see the market get to this point first. Remember, we've marked our previous reference point, right, using our Fibonacci tool to extend from what the high of the previous day to the low of that day, being Thursday. Okay, now we want to get some market directional bias trading opportunities for Friday, right? And right here, you can see that the market here is trading between what? The 0 fib level, 0.0 fib level, and the 38.0 fib level. Now, guys, if you've come this far with us in this channel, you would have learned one or two things about how we use the Fibonacci retracement tool. And this approach and concept of trading, guys, is exclusive to the Millionaire logistics concepts and trading approach, right? And you can very much see how we've backtested this, and we actually trade this to share with you how the market performs under this condition. And one thing to note, guys, is this. There are other things we apply to this too, including what the trading sessions, time of the day to aim precision. So this may not work perfectly well on exotic or minor pairs. So that's why we've actually been testing this on the pound USD. We've actually been trading this rather on the pound USD, and you can also get similar results if you trade the Euro USD or any of the currency majors. All right. So at this point here, we saw this opportunity here at the beginning of what the London session. You can see well how the market is trading within the range, and normally if the market is right here, right at this point, the range bound here from the 0.0 fib level, we expect the market to move and react at any of these fib levels. Remember, these levels here connote what? Resistance levels and support levels depending on the market flow. So as the London session starts, you see this rejection here first, right? And we see what? Putting this candle patterns together, you can see that this kind of a morning star formation. For those of you who are familiar with what basic price action candle reversal patterns and all, right, you can technically deduce this off the chart. All right, and then see what happened at the beginning of the session here. At the beginning of the London session, you can see how perfectly this market performed. So if you had entered this trade here after this confirmation, this move here, you must have gotten this with us. This is about 60 pips thereabout in the morning. You see how very well it turned out to be, right? Now, simply getting this signal from what? The reference from the previous day high and low. That's very simple. And then coming down here to the New York, the beginning of the New York session, we started by 1 p.m. You see how very well the market performed. After this rejection here, somewhere, this was the exact point I entered the chart. So I want to be very quick. This was, I think, the point. So one would say I entered late, but I was looking for a drop down, like for price to actually close bearish like this, somewhere around here before I enter. But seeing this, I was on the market and I simply took the risks from here, and I got my profit somewhere around, I think, at this candle, and I made about, I think it should be somewhere around here, because I made about 60 pips from this move, right? So it's very simple. You can see how the market just performed brilliantly at this intersection. All right, now the next phase of this, guys, is we're going to be we're going to be looking at the fundamentals of the market, right? That's the NFP, as at when the NFP was released, the data report and all. So guys, we're going to take some minutes to go online and see the data report. Okay, guys, we'll be looking at we're looking at the NFP reports. That's the one that was released at exactly the 7th of October 2022, being yesterday, the first Friday of the month. Remember, guys, the NFP reports, it's a very important data that is being released at the first Friday of every month. And the NFP report is one that comes from the US, the United States, and basically tells how the United States economy performs in terms of what employment numbers and job numbers, which we all know affects the economy or any economy in diverse ways. So right here, guys, in our previous content, we've actually shared how the NFP report, how you can use the NFP report to get the sentimental bias from what a directional and fundamental bias of what the pairs that are paired with the USD. Okay, so but right here, guys, because this content has to be very short and has to be straight to point for as much as possible, we're not going to be we're not going to emphasize on the NFP, but rather we're just going to be looking at the previous data and the current data, and how we'll then go back to the chart and see how it relates at that particular time. So guys, if you're hooked on to this very point, guys, know what you stand to gain, because after we look at the chart right now, and after we look at this data right here and we analyze it, we're going to go back to the chart and we're going to be doing what the entire thing, that's the main thing, which is precision trading. And very much we're going to be timing that with when exactly these data was released and how the market performed at that time and how you too can take advantage of it with confirmation of what that Fibonacci tool and also with our MLX IVT tool. Okay, so if you've come this far, guys, we do appreciate you, and don't forget, guys, to like and share your thoughts in the comment section, right, if you love the idea. Okay, so now the previous data here shows what we have, 526,000. Now I've explained this previously. When you see figures like this simply means 526,000, right? And for this particular reference here, it's 526,000 more jobs that was added to the United States economy in areas of what the non-farm sector. That's non-farm sector with exclusion of what private jobs and farming jobs and all right? So the last report, right, was in September 2nd, 2022, which was the last Friday, the first Friday rather of the month of September, right? You can check down your calendar to see if we're in line, all right? Now, the final report was 315K, that's 315,000 more jobs, right? Well, before then, we have here the previous being 526K, 526,000 jobs, right, which was the previous. And if you look well, the previous here was very close to the actual of for the month of August, all right? But like I explained earlier, you have this sign here, the amber circle here, to show that this figure was revised, all right? It was revised, rather reviewed, and was, you know, we have a revised, like a reviewed data right here. But going to the present one here, the previous, which was exactly the actual of for the month of September 2nd, which you see as 315K as actual, and for the month of the report that was released now just yesterday had the actual of September to be what the previous, right? And you don't see any yellow amber cycle here, which shows that the price is the same. It wasn't revised, it was the same, you know, all time, right? And then, so this was the previous one, and then economics and fundamentalists and all forecasted that 250,000 more jobs will be added to the US economy. But then when the data report was released, it showed that what, instead of 250,000 that was forecasted, 263,000 more jobs was added to the US economy with this green sign here. So that empirically, it means that what, on the overall, that the United States dollar remains strong because more jobs than expected was added to what the US economy. So fundamentally, we can build a sentimental bias that the United States dollar is strong at the moment. And when going back to the chart, if the United States dollar is strong when compared to other currencies, within that time, within that period of time, you should expect other news too that will be coming in from the US to what align with this potential. So in our consequent contents, we're going to be explaining what the psychological impact, that's the psychological impact of persons. Now, right now, we're talking about what the citizens in the US, we're talking about investor sentiment. We're going to be discussing all of that in our consequent content. I don't know how soon, but how this data replicates and reflects in real life, all right? But right now, let's just focus on the chart. Okay, so since the United States dollar here, from all this summary, you can just summarize that, hey, the United States dollar is quick, the United States dollar is stronger to any other pair that's, you know, it's being paired to, right? Any other currency rather that it's being paired to. So with this, guys, let's delve back to the chart. So back to the chart, guys, we'll be paying reference to just the period where the news was released. So guys, remember we're dealing precision trading, and what the news, the NFP reports actually comes at particular times on morning sections of what, when the morning hour of the New York time, okay? And if we replicate this to our chart time, because I'm trading from Nigeria, so the time zones too actually has a major role to play. So we should be expecting the result, the report from this news at around 1 p.m. Right now, 1 p.m., the US time should be around 8 a.m. Eastern time, like 8 a.m., 8 EST, right? 8 a.m. US time. while from we over here, because of the difference, 6-hour difference, guys, from Nigeria, I actually want to be expecting the New York time around 1 p.m. So the news was released, in fact, just here, 1 p.m., which is on the chart here is 15:00. And every time, guys, I've laid emphasis on this. The chart time, the chart we use here, guys, is what is 2 hours ahead of the real time, because I've been doing this for quite some time, for a long time, and these are the experiences and these are the one and twos that I've been able to put together, okay, to help me. So I also want to be sharing the same information with you to guide you. Now, when the news was released at 1 p.m., 1 p.m. right here, definitely if you look at the data, maybe there may be some delay, which I also experienced too, which made me to enter this trade lately. But looking at the trend too, it gave me some insight that, hey, with this release, I'm still expecting the US dollar to be stronger than the pound. Considerably, we're still going to be discussing that too in consequent contents, the sentimental impact too of the market and all, and how I reflect. So, and then we see this move here, pound USD, still from this very relevant zone here that price has been reacting. And guys, don't forget the MLX IVT tool, which is different. You can see this zone that is spotted here. Very easy sniper setup, easy entry setup and all right. And very much you see the move right here, showing that pound USD is what? Weak. If the pound USD, when paired together, if the US dollar is going up, pound USD, the pound should be coming down, which you see here. That's very much of the basic, but perhaps in consequent contents, we'll be breaking these things down to in an exclusive content, so you don't get confused and bombarded with a whole lot of information to process. Okay, so right here, we've actually gotten the sentiment, the fundamental news from the NFP, right? And we built a fundamental bias that the USD is strong, meaning that if the USD is strong, when paired to the pound has to be weak. And that shows that I should be looking to sell the pound against the USD. And as you can see how well that played out around 38.0 fib level, which presented an opportunity that was tradable. And I got into the market here, right? I think I entered the trade even before setting the stop loss, setting something around here, I think just here, 35, and then taking my take profit somewhere around here. I slipped off the market for a bit for a 1 to 2.5 risk to reward ratio. Okay, so guys, if you've benefited from this concept, this strategy that we've shared, don't forget to subscribe to the channel, don't forget to like, and don't forget to share your thoughts in the comment section. Okay, now looking at the next move, right? Let me just share an analysis using this same simple context, this same simple scenario right here. This is what we want to be looking at. Very well simple. On the next day, by Monday, if this price trades around this range till the London section, if we find the market here at the London section around this area, we're going up and we're taking profit somewhere around here. However, if the London section starts somewhere around, if we find the market London session around 50 fib level, which I'm expecting that somewhere either at the London session or the beginning or during the London session or at the beginning or during the New York session, that we may find price around this point here. We may find price around this level right here, right? And that will be giving me a scenario to what? Go short. Just back to this level, making still around this same profit level, guys. So right here in this content, guys, we've given a cheat. We've actually given an analysis of the pound USD for the coming week, all right? And we've also shared with you the forex trading strategy, same way, and we've also done a back test, an exclusive value packed content in less than 15 minutes. So guys, if you love the idea, don't forget to stick to the channel, subscribe for more of this as we trade forex with Millionaire Logistics. Love you guys and see you in our next content.